Hello friends and welcome to BISP Solution. My name is Ankita and today we will continue with the custom financial planning application. In custom financial planning application, today we will learn balance sheet and cash flow statement. It's basic and we will create a direct input form for the same. So before that, let's have an introduction with the balance sheet first. Balance sheet is a part of the financial statement that reports a company's assets, liabilities, and shareholders' equity at a specific point in time. Balance sheet is one of three core financial statements that are used to evaluate a business. It provides a snapshot of the company's finance, means what it owns and owes as of the date of publication. So, as the definition of balance sheet itself suggests that it consists of assets, liabilities, and equities. So, first we will have a introduction with the assets. So, in finance, an asset is any resource owned or controlled by a business or an economic entity. It can be used to produce positive economic values. Assets also represent value of ownership that can be converted into cash in the future. So, asset is further categorized into current assets and non-current assets. So, for that, we will move to our application. In the interface, we will first go to the dimension. Then here in the balance sheet planning, we will go to the predefined balance sheet accounts. As we can see that we have assets and liabilities in it. We will expand assets further. So here we have the current assets and the fixed assets. So the current assets is the when all the assets of the company that are expected to be conveniently sold, consumed, used, or exhausted through a standard business operation within one fiscal year or operating cycle is termed as current assets. So when we expand it further, we will have the cash and investment. These investment are all short-term investment, which is for a period of less than 1 year. Okay, so after that we have the receivables, which actually depends on the life cycle, operating life cycle of the business. Then here comes the other current assets, which consist of prepaid expenses and the closing inventory. Okay, so this was all about our current assets. Now we will move forward to the fixed assets. So the fixed assets are the assets which are purchased for a long-term use and are not likely to be converted quickly into cash. For example, land, investment, long-term investment. Here in our application we have like real estate, equipment, goodwill. Other long-term assets are deferred tax assets. Okay, so these are all the categories of fixed assets. So here we in this application we have land improvement, building, lease improvement, then CIP building, cost work in progress, capital work in progress. Okay, so here we can see that we even have the accumulated depreciation, which will be subtracted from the respective assets. So like for example, here we have the accumulated depreciation of land improvement. It will be subtracted from uh, the historical value of land improvement. So here we have accumulated depreciation for building, leasehold expenses. However, we do not have the accumulated depreciation for land, as the land values always appreciate. So we can also say that land is outside the purview of the accumulated depreciation. Then we will move forward to the liability section. So liability and equity. Here we have liability and the shareholders equity. So in the liabilities, so liability is something a company or person owes, usually a sum of money. Liabilities are settled over time through the transfer of economic benefits, including money, goods, or services. Liability can also mean a legal or regulatory risk or obligations. So the liability is also further categorized into current liabilities and non-current liabilities. Non-current liabilities are also termed as long-term liabilities. So first we will see the current liabilities. So the current liabilities are company short-term financial obligations that are due within 1 year or the normal operating cycle. So here in this application we will see that the in the liabilities we have billing in excess of cost in earning. These are all short-term liabilities. Then we have account payables, accrued expenses. These are all short-term liabilities. So these are the non-interest bearing liabilities. Then we have debt with us. So the short term, that is the current debt, is also a short term, that is a current part of current liability. So these are all the current liabilities that I have explained. Now we will understand first the long term liabilities. So the long term liabilities are the obligation listed on the balance sheet which are not due for more than a year. So the long-term liabilities are here it is as debt, which is a long-term liability, loans that the organization is taking from any bank or any financial institutions are all categorized as long-term liabilities. Okay, so these are some of the examples of long-term liabilities. Now we will then move forward to the shareholders equity. So equity is the amount of money that a company's owner has put into it or owns or purchased. Equity is also termed as value of the business after deducting liability from assets. So basically, let me explain with the help of an Excel sheet. So basically, this is a little bit huge. So basically, when we talk about when we have said that the equity is termed as the value of the business after deducting liabilities from asset, it means that equity is equal to assets minus liabilities. When we will reverse it, means when asset is equal to when asset is equals to equity, it means that assets can also be categorized as will also be equal to equity plus liabilities. Sorry. Okay, so this is what I wanted to explain you. Okay, so similarly, we can also, when we keep the liabilities in the left hand side, then in the right hand side, assets will be, then asset will be subtracted from the when we will keep the liabilities at the left hand side, it means that asset will be subtracted from the equity. So here in the second one, we have explained that assets is equal to liability plus equity. So when the asset is like 1 lakh, it will be equal to, for example, equity is 60,000. So the liability will be 40,000. Okay, so this is how the balance sheet is being tallied. Here I have a balance sheet with me. I'll show you how it looks like. So for that I will take you to the data, and in it I will click on forecast. Here we have the balance sheet forecast. I will show you this with the help of a smart view. There is no valid rule. How is that possible? Okay, wait. Okay. Now we have a balance sheet. I will then open it with the smart view. Okay, so this is our balance sheet. Okay, so here we can see that the balance sheet is for the forecast and FY23. Here in this case we can see that the asset is 2,41,000. I will summarize it here. Asset is equals to 2,41,000. Now we will check the liabilities, and then we will check for the equity. Okay, so here the asset is equals to 2,41,000. Now here the liability we have is 1,71,000. I will copy this, and then again I will see that where is the equity. Here we have the shareholders fund. Okay, so this is the equity. Okay, now when we will be totaling liabilities and equity, we will get 2,41,000. It shows that the assets is equal to liability and equity. Okay. Now we will learn to create a balance sheet direct input form. So for that I will go to the navigator. Here I will select the form, and then I will create a form in plan. I will name the form as balance sheet plan. Here in the description I can mention the detail about it if I want to. So here I'm mentioning it as direct input form. Okay, after that I will click on next. So this is our layout. So here I will select accounts and I will drag this to the rows as I want my account in the row. Then first I will drag and drop all the dimensions. Okay, after that I will give the names to it. I will name it after that. So in the POV we will be having base data. It is defaultly it is being selected. Then we will take the department into the page. Then product also we will take this into the page. And then comes the entity. And we will take the version also here in the page. So we have taken department, entity, product and version dimensions in the pages so that we can select as per the requirement. We can choose the member as per our own requirement. Then we will be having years in the column. Then we will have a period in the column. And lastly we will have scenario also in the column. So I want the scenario to be moved up. So by right clicking it, I will move my scenario dimension to the up side. Okay, so now I will select the members. So I will edit here, click on edit. Then for department, I will be selecting the department and its descendants. Okay, however I don't want here the total job, so I will click on exclude and now I will edit it, the total descendants of the total job I want here. So this is what I have excluded. Then we will be having the entity with us. So I'm going to select the entity. So here I will be having the descendants of the Sanskar entity. For product, I will click on edit and then I will select here level 0 descendants product. So here all the 0 level members of the product will be considered. Then for version, we'll be selecting all the level 0 descendants of version as well. After that, in the accounts, after clicking on edit, I will select the balance sheet planning. In it, I will be selecting the predefined balance sheet. So here I have selected descendants of predefined balance sheet. Then for scenario, we will be selecting plan. And for years here, we will be selecting FY23, FY24, 25 and 26. Then for period, we will be selecting the year total. So here we will be selecting descendants of years total. Okay, so after that I will save the changes and then I will preview it. So here we have the form, but we cannot identify which members, what is the name of the members. So for that I will be clicking on the accounts in the row, and then I will enable the areas over here in the dimension properties. Similarly, I will do the same with the department, with the and with the entity as well. Now I will preview it. Now I believe it's perfect as per the requirement it is. Now I will then save the form and then I will click on finish. So here we have the balance sheet plan. We want to edit it, so for that I will go to the data by navigator, with the help of navigator, and then here I will be selecting on data. I will go to plan. Here we have balance sheet plan, and we can directly input the values as per our planning in it. Okay, so this is how we create our data forms. So this was all about our balance sheet. Now we will move to the cash flow statement. So what cash flow statement is? A cash flow statement, it is a part of the financial statement that aggregates a company's cash inflows and outflows from operations, investing and financing over a set period of time. There are three formats of cash flow statement. First is the direct method, and the another one is the indirect method. So in the direct method, operating cash flows are presented as a list of ingoing and outgoing cash flows. Essentially, the direct method subtract the money you spent from the money you received. It is a very simple method. And then the second one we have with us is the indirect method. So the indirect method represents the operating cash flow as a reconciliation from profit to cash flow. So this is a very systematic format. Basically, industry standard. This is industry standard method. Okay, so I will show you the cash flow statement in our application. So for that I will again go to navigator and then in dimension in create and manage. So here in accounts we have the indirect cash flow statement. As I told you, this is the industry standard. So here we have the cash ending balance, then we have the cash total cash flow, and which is being further subcategorized into operating activity, investing activity and financing activity. So what operating activity consider is it always consider the income statement. So the activities which so the inflow and outflow of cash which takes place for the operations of the business, that is like for example in case of a manufacturing industry, the cash outflow takes place for the purpose of purchasing the raw materials and for manufacturing it. So this is considered as the cash outflow from operating activities, and the inflow is from the sale of the finished goods in case of manufacturing unit. So this is a small example of how the operating what operating activities consist of. So it It consists of basically the, in next case of expenses, it consider the labor expenses, the overheads, and the material expenditures. Cost of sale is considered into it. And when we talk about the income, so the sales of the sales of the asset, the sales of the goods are considered here. We will understand it in more detail in the when we will be going to the instance. Then we have the investing activities. So investing activities, as the name itself suggests, it is for the purchase. It is all related to the assets. When there is an inflow of when we are purchasing an asset, there is an outflow of the fund. Okay, so it will be in the negative form. When there is a sale of the asset, so we find that there is inflow of the fund. Okay, so all these activities are considered in the investing activities. In financing activities, we considered all the long-term liabilities and stockholders' equity. So the when there is an inflow, or means like for example, a company is lending a long-term loan from any financial institutions or bank. This will be considered in the long-term liability, means this is an inflow of the fund. Okay, when the loan is being repaid, so there is an outflow of the fund. So this activity takes place, is considered in the financing activities. So here in this diagram, we can see that in the rightmost corner, we have the income statement, we have the balance sheet with us. Okay. So in the balance sheet, we can see in other current assets, a member name 13,000 prepaid expenses. Okay. Here, in the rightmost corner, we have cash flow. And all the members are given here. So here we can see the arrow is being pointed to the changes in prepaid expenses. So how we calculate the prepaid expenses is, the prior period prepaid expenses are subtracted from the current period prepaid expenses. I'll show you that. For example, we need to calculate the changes in prepaid expenses that will be calculated by subtracting previous period prepaid expenses minus current year prepaid expense. Oh, this, it looked like a formula. Okay, so this is how we calculate this. And when we calculate the changes in any of the liabilities, then this will get reversed. Current year liabilities will be subtracted from the previous year liabilities. Okay, so this is how we calculate the cash flow, changes in the assets and the liabilities. Now we will go to our instance. Here we will see that cash flow from operating activity consists of net income, and here we have the depreciation, which is being added back to the net income because depreciation is a non-cash expenditure. Then we have the adjustment to net income, which have a child name, changes in operating assets and liabilities. This is also called as changes in working capital. So the working capital basically consists of current assets and current liabilities, which actually affect the operating activities of an organization. So here we can see that we have the member named, account receivable, short-term investment, inventory, other receivables, prepaid expenses. So these are all the current assets. Then comes the accounts payable, accrued expenses, current debts. These are all current liabilities. So changes in this members affect our changes in operating assets and liabilities, and so it affects our adjustment to net income. Then we have the cash flow from investing activities. As I told you previously, as I explained you previously, that the purchase of securities and investments are considered here, and the proceeds from sales of the investments are also taken care of in the investing activities. Then we have the changes in fixed asset here as well. So all the sales proceeds of the fixed assets are subtracted from the purchase of the fixed assets. Similarly, we will now move forward to the cash flow from financing activity. So the cash flow from financing activity consists of the repayment of the borrowing. So when we repay the borrowing, it is termed as the outflow of cash, and this will negate our cash flow statement. Then we have proceeds from borrowing. So when we talk about the proceeds from borrowing, it will proceeds from borrowing means there is an inflow of the funds or cash in the organization. So this will give a positive value in the cash flow statement. Now the changes in the long-term debts consist of the sales of the repayment of the borrowing is subtracted from the proceeds of the borrowing here, and the net figure will be mentioned. Then we have the cash beginning balance. So the cash in beginning balance is the opening cash balance. Okay, so all this figure will be added, and then it will have an impact on the total cash flow. So this will have the this should tally with the cash ending balance. Okay, so this will be the final figure. This cash flow statement helps us in analyzing the company's financial condition. Okay, so now we will create a form, a direct input form for a cash flow statement. So here I will click on form, and then in the plan I will then click on this plus sign and then add a form here. This is a cash flow statement. And this is going to be a direct input form. After that I will click on next. Now I will select the account and will drag this to the row. Similarly, I will drag the period in the column and then the year. I will drag the year as well in the column. Okay, I want year on the upward portion, so I will move dimension up. Okay, now I want in the POV, I want my HSP view, base data, and scenario as plan. Here for version, I want to select the working version, and then I want my product, entity, and department all in the pages. So for product, I will be selecting level 0 descendants. For entity, I will be selecting the I descendants of Sanskar entity. Then for department here, I will be selecting the total department and its including its descendants. Here now I will select in accounts the indirect cash flow statement. So here I will select I descendants of the indirect cash flow statement in it. Then for year, I will be selecting FY23, FY24, FY25, and FY26. I will select place selection in separate column, then I will click on OK. And then for period, I will be selecting the year total ID and its I descendants. Okay, now I will check whether, okay, I need to select the period for rest of the dimensions as well. Sorry, rest other columns as well. So I will select the I descendants of year total. Okay, now I will save the changes that I made into this form. And then here in the indirect cash flow, I will be selecting the area's name as well. In the dimension properties, similar with the entity and the department. After saving the changes, I will preview it. Okay, so here we have the value. We can add depreciation. Okay, so this is the form that we have created. Now I will save or whatever changes that I have made in this form, and then I will click on finish. If I want to edit in the form, then I will click on data, and then I will go to the location where I have saved my form, that is in planning, named as cash flow statement plan. Okay, here I can edit the value according to our plannings here. Okay, so this is how it is. This is how we create the direct input form. So this was all for today. For any more queries, please feel free to ask. Thank you.